All right, let's talk about this now with Anthony Chan. He's the former chief economist at JP Morgan Chase. Anthony, good to have you with us this morning. Look, these numbers are horrific. We knew they would be, but really they're backward-looking numbers. I want to talk about the here and now, what we're seeing in the third quarter. Yesterday, Fed Chair Jerome Powell admitted the recovery looks like it has slowed. Is this economy starting to backslide, Anthony?
Well, I think it's recovering. It's just not recovering at the fast pace that everyone was hoping for, because you can see that with the number of infections rising, you're not going to get that big jump in momentum that people were hoping for. But I still see the economy doing a little bit better in the third quarter. I still think we're probably going to be looking at a number of somewhere above 18% growth in the third quarter. That's not going to be sort of eliminating the deep hole that we went into. And in fact, to really tell us where we're going, what I'm finding is that now we have to look at a lot of other economic measures that we never even thought about looking at maybe 6 months or 9 months ago. A lot of the mobility indices, a lot of things that tell us high frequency, how many people are going to restaurants and things like that. And all that is telling us that since the reinfections or the infection rate started picking up by late June and certainly by July, that we are seeing a little bit loss of momentum. But we're not seeing a collapse yet. And remember that this is not taking place against a completely empty backdrop. We are making progress on the medical front. So all this tells us we will not see as much growth as we would like, but I don't think it's a time when we should throw in the towel just yet.
Anthony, looking inside the GDP report, the personal savings rate, 25.7%. That tells me that consumers remain very scared about their income prospects for the next 3 to 6 months. Do you think the economy is weaker right now than the stock market believes it is?
Well, I think that right now the stock market is reacting to the fact that there is a strong expectation that the recession ended sometime in May. And that's what markets do. The stock market usually starts to recover right after a recession is over. The big danger, of course, is whether or not we can sort of slip and fall off the cliff and go back into a recession. And certainly Jerome Powell, our Fed chair, gave us a message yesterday that is a risk if we don't continue to make progress on the health front. I am somewhat cautiously optimistic that we will continue to make progress. So I think the market is just pricing in that the recession is over. But at the same time, I'm not so optimistic as to think that it's a V-shaped recovery. It's going to be a long slog and a slow process before we can say we're totally out of the woods.
Anthony, how much of the pace of the recovery is pegged to another stimulus plan? Because it looks like lawmakers are at an impasse. We've got that $600 extra unemployment insurance expiring tomorrow. Will states have to come in here and perhaps fill that gap until lawmakers can get their acts together? How important is it that we get that new stimulus plan and get it right away?
I think, Alexis, is very important. And it goes back to what Brian was talking about. All this really depends on, it's going to influence the momentum. Remember the last time when you looked at the $1,200 and the $600 extra amount that you gave for unemployment benefits, what you saw was that added almost on an annualized basis about $200 billion out there to the overall economy, which is about 1% of GDP, which in normal times, that seems like a lot of money. But when you're talking about the economy dropping by over 30%, it seems like a small amount. But at the same time, when people hear that the GDP number goes down by that much, remember, these numbers are annualized. So you're basically multiplying what happens in a 3-month period almost by 4. So you really have to put that in perspective. Yes, the economy is falling, and yes, it's the biggest decline that we've ever seen in the history of GDP numbers, bigger than anything we saw in the global financial crisis. But again, these numbers are annualized, so things to keep that in mind. But yes, I think that's one of the reasons, as Brian mentioned, that the personal savings rate is so high, because people were making up for a lot of that lost income, and they couldn't spend it because there was sheltering in place. But as the economy starts to open up, a lot of that savings will, in fact, disappear, and those expenditures will take place as this procedure unfolds.
All right, Anthony Chan, former chief economist at JP Morgan Chase. Good to see you this morning.
Thank you.